All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market, about 90 minutes left here today, Wednesday. And, a historic day in some regards, to this trade agreement, albeit a watered down one. And, even though all the details haven't been published yet about the trade agreement, it simply looks like an agreement on what was agreed upon last May and then didn't actually happen, and things escalated from there. So it really is, not something that I think on the in terms of what is actually going to happen with it is all that significant. But, yeah, okay. Next step, and we're talking probably phase two, really not being a big issue this year, meaning no real negotiations on it. We are probably looking into next year after the U.S. presidential election, and maybe some of the political landscape changes. Maybe it doesn't, and so that's kind of what we're looking at there with the trade agreement. As far as the market's reaction, nothing too major there with it. Even though yesterday's report did cause the market to sell off some, and you can see the market right now is exactly where it was yesterday before the report that U.S. wouldn't be rolling back tariffs to a super significant degree there. So, the market is kind of fussed all that out, and there we are. All right. Challenge. We have one position on the board, and that is Pepsi here. Pepsi option is 385 is the mark on that here. So up a little bit here today. Push the challenge right back there to 3,000. Challenge gains of $5. Okay. So after a very slow start, news kind of basically we get into Starbucks and Disney, and boom, there goes the missile. And great. Starbucks recovered, Disney didn't. But, that's either here or there. But right now we have our profit level 139.31 for Pepsi, and Pepsi is trading at 139 or 138.92. So we're just south of that, profit target here for Pepsi. It does look like it's breaking out of this consolidation. And breakouts, they're not ever guaranteed or anything like that, but does look like we have the breakout action going on. Would be nice to see, some nice follow through here to it tomorrow, and see where that goes. Now, as far as the actual position that we have 5 contracts here on it, so if it does hit our price target here by tomorrow morning, we'll be trimming some of that and possibly rolling some of that into a different option. But that's going to come down to what the options look like, because Pepsi does have earnings upcoming here, and it is something where those earnings are going to affect the option values. Now, they're not till February 13th, right? So, that's why we went with the February 7th, and, those are still 23 days from now. But it is something where where we'll have to take a look and see what's going on if and when that happens. Hopefully, it happens by tomorrow morning, and be able to run with it. Now, as far as any new signals, there are no new signals on the board right now. It's pretty dry out there, in general, from a technical standpoint. If we look at the upside crossovers that are out there right now, 0 for the challenge watch list. If we look at the downside crossovers for the watch list, there were 5 last I saw. Yeah, Bank of America, Ford, JP Morgan, MGM, and Valero. None of them even close to a signal. So nothing really for me to react to and to go with there. And these aren't things where I go, oh, the algorithm is just a little too tight. If the algorithm weren't, as tight, we'd have a signal. No, these aren't even close to a signal. And, it's a lot of that has to do with coming off of fresh new highs like a Bank of America or a JP Morgan, right, where they've come off of fresh new highs. MGM, same scenario. Valero, a little bit different here, but this is also one that has moved 2 ATRs to get to where it is. So just no real chance of a signal on any of these. And then Ford, just stuck in this consolidation right here, right now. It wasn't an upside trigger on the upside cross, isn't a downside trigger on the downside cross with that, consolidation risk. Okay. All right. So that's trade agreement, the challenge. So I'm going to go into the close here with Pepsi and cash, and run from there. Market vibe here today is where it has been, and it's not, it's something where it's not overly bullish. It has not pushed into that super overextended area, but it's just kind of tracked in that kind of 6 to 8 range. We continue to see some of the metrics like bullish percent index. It just keeps on tracking higher. We talked about this last week that, it can't get too much higher than this historically, right? If we come and we put up a, just a monthly chart here, I showed this before, but I'll show it again. You can see the 82. Yeah, we've hit here before, back in 2013, 2018, and, we're hitting up to that level now. But when we look at times where it's hit up into that level, it doesn't necessarily mean the market's got to go down. In fact, you may recall, 2003 was the end of a bear market. And in 2004, the bullish percent index went up here almost to 90. And the market just continued to go higher. Yeah, did all stocks participate to the same degree? No. But, it's one where just because you're high doesn't mean it has to have a pullback. And we're in that position right here, right now, with the market. And, no signs yet for the bears of, some massive selling to come or anything like that. When we look at, some of the just basic, quick reactors, you look at the number of stocks above 7-day moving averages. We have 72% above the 7. That's, not too hot, not too cold. That's kind of the, semi-Goldilocks zone for the bulls. Here on the number of stocks above or below the 20-day moving average, while these are above, we have the same number, pretty much 71, 72% there. So just a market right now that continues to be strongly controlled by the bulls, continues to be highly differential, and with very few warning signs of, hey, things are ready to fall. The only thing the bears really have are overbought, and we've talked about that to a couple extents, because overbought simply doesn't mean has to go down. But that's what the bears have, and outside of that, they just don't have a whole lot. Now, you can look at today's price action and take a look at a sector summary and go, okay, this is led by utilities, healthcare, real estate, consumer staples. These are more conservative areas. So, there's kind of a move into some more conservative type positioning. And, I think there's something a little bit there to it. And I do think from a, fund manager standpoint, a little more conservative positioning is very wise right here, without a wall of worry for the markets. Just how often do we see a market like this with no wall of worry? Right? What's the big issue the market has to tackle? What's the big worry point for the market right now? There just simply isn't one. It is one where, it's green light for the bulls, and they continue to go. And so, a lot of times the bulls need a wall of worry to climb to get up to, great heights. And without that wall of worry, we tend to see some stagnation to pull back. But I think when you really look at this, one of the bears' biggest problems with the market is, even if they're right that the market top is in, they got to be right about a pullback. And we could easily see a scenario where, top's in, and maybe there's a 1 to 2 day pullback, but there's just a consolidation, right? And we talked earlier, earlier this week, about the Dow Jones Industrial Average and this push to 30,000, right? I'm not a big believer in headlines, numbers, and even numbers, but we're starting to get close enough to that 30,000 level that we may see, investors, try to push it there. Try to push it there. Hopefully, they use Pepsi to help push it there, but we'll see. We'll see there. All right. I guess S&P 500 stocks, so wouldn't matter all that much. But anyway, that's the challenge, and I know there's not a massive change going on out there, and so it just comes. Hey, if you're itching to jump into something, you really want into something, to the upside, you take a look at it and you say, okay. I'll be a buyer and use the low from the prior day as my stop. And if that breaks, the odds aren't great in my favor, so I need to back out. Something like Deere, okay, breaking the lows from yesterday, odds just aren't that great. But hey, it gaps up tomorrow, right? This is one that I have on my list to want to be a buyer of tomorrow. If it were to gap up tomorrow, I can be a buyer. I can use today's low as a stop point, and I can go and trade that. So you have something like a UPS. You could do that with. You could do that with, a Visa, for instance. Even though it just continues to, fly on higher here. You just use the low from the prior day and go with it. But certainly that is not a comfortable thing for a lot of traders to do. They want to be in on the bottom and out at the top. But a lot of things it's about hey, they're already in trends and running, and finding a place to jump on in. I almost grabbed some Facebook today. I may grab it before the close, and I could just use yesterday's low as a stopping point, and if it goes higher tomorrow, adjust that to today's low and keep it that simple. And I think if you're really itching to jump in, bigger here and there, you're not in or something like that, I think that's kind of the simplicity you have to kind of take here with what this market is right here and right now. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.